Hello, my name is Charlie Moran. I'm a senior analyst here at Value Line. I'm joined today by two other senior analysts, Alan House and Nathaniel Aiken. Today we're going to provide an update on the economy and stock market. We will then recommend one stock to buy right now and finally answer any questions you may have. Please note that this presentation will be available on our website, valueline.com, and on our YouTube channel within the next 48 hours. All previous webinars are also posted. Before I jump into the heart of the presentation, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 90 years. Our flagship product is the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. One thing I want to stress is that our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including all the equities under our coverage. Value Line does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. If you have any questions about the products or services we offer or our different tiers of subscriptions, that information can be found again at valueline.com, or you can call 1-800-VALUE-LINE. Now let's discuss the economy and the stock market. This content was prepared by Value Line's economic staff. Inflation remains sticky. After trending lower over the late spring and early summer months, both the consumer and producer price indices came in stronger than expected in August. Likewise, core consumer and producer prices, which exclude the volatile energy and food components, moved in the wrong direction for what is expected to be a Federal Reserve that is data-driven in formulating monetary policy. The central bank may keep the benchmark short-term interest rate higher for an extended period to effectively fight inflation. The Federal Open Market Committee, FOMC, which was to make its September monetary policy decision shortly after we had gone to press at that time, was expected to keep the federal funds rate steady at 5.25 to 5.50%, but the possibility of another quarter-point hike this year remains on the table. The Fed was more hawkish this past summer, which put upward pressure on Treasury yields. Rising oil prices bear watching as well. Although the central bank typically doesn't base its monetary policy decisions on the energy market, higher crude quotations will make it more expensive for manufacturers to produce goods. These result in elevated operating costs will probably be passed through to consumers in the form of higher prices, which will likely keep inflation above the Fed's comfort level. This situation may be exacerbated in the auto sector given the likely impact of the United Auto Workers strike on production and ultimate supply. Consumers remain cognizant of the inflation situation, and this is starting to have a greater impact on how they spend their money. According to the University of Michigan, consumer sentiment fell for the second consecutive month to 67.7 in August, a level well below the historical average of 86. This may get worse given the aforementioned higher energy prices ahead of the upcoming peak heating season. The current consensus is that the consumer will be more cautious this holiday shopping season, with higher prices for essential items causing shoppers to cut back on discretionary spending. This also comes as savings accounts shrink and nationwide credit card balances balloon. Conclusion, we think this is the time to exercise some caution. Volatility has picked up as the market is dealing with several headwinds during a traditionally tough period for equities. On that note, Value Line is providing a great deal of information and analysis to help our subscribers. We know that most of our users depend on our weekly stock reports, time-tested ranking systems, and other valuable services. In addition, Value Line provides a great deal of daily content that can help you avoid the pitfalls and profit during this volatile time in the stock market. Every business day, senior members of the Value Line's research department review the most actively traded stocks, company press releases, news stories, trade periodicals, and other sources for data and information that may change our view and investment recommendations for specific stocks. When something noteworthy crosses our desk, we immediately publish a supplementary report that outlines the new information and, importantly, what it means for the stock and shareholders. This content is posted throughout the day on our website. Again, that's valueline.com. I will now show you how to access it. Once signed in, head to the dashboard where I am already located. This is the main landing page for subscribers. Under the quick links, click on supplementary reports. As you can see, the research department has been busy publishing our updated thoughts on the stocks that we track. There we go. We strongly suggest that subscribers visit this page often. Some individual companies incurred a lot of debt or sold stock to improve liquidity over the last few years. Due to the changing structure of company balance sheets, Value Line has been reviewing and altering our proprietary financial strength grades for the stocks in our coverage universe. These changes are posted each week in our Selection and Opinion newsletter. For those of you that don't know, financial strength along with price stability, another proprietary Value Line measure, are the two metrics that are used to calculate a stock's safety rank, a key measure of risk. When considering a new stock to invest in, we strongly suggest that you utilize financial strength and safety in your decision-making process. For more information in regard to our proprietary ranks and ratings, Value Line provides a user guide that can be accessed via the investment education section of our website. Lastly, this is a good time to mention that the case for individual stocks is quite strong over broad index funds. And now we're going to go to the screener and examine the one stock to buy right now. For this, let's go to the screener. Value Line subscribers have access to 15 preset screens and 50 fields. See if we can get there. It's acting up a bit. There we go. And now we'll examine the screening criteria and the steps. The current economic environment remains uncertain, marked by inflation worries, geopolitical concerns, and the possibility of a recession. Many large, well-known stocks have grabbed headlines lately, but we would like to search for other equities with better long-term potential with average risk profiles. We'll start the screening process by looking at the safety rank in the ratings and ranks section. And the first screen we're going to apply is a safety rank of 3 or better. Now, there are many risk measures to consider, but today we're going to start by applying our time-tested safety ranks. Safety measures the total risk of a stock and is arranged on an easy-to-understand scale from 1 to 5, with 1 being the most conservative issues. I want to highlight the fact that stocks ranked favorably for safety have in the past held up far better than the broader market during corrections and downturns. They also meaningfully participate in up markets. For more information, I encourage you to peruse our ranking system guide, which is available free of charge from within the investment education section of our website. We're going to focus on stocks with a safety rank of 3 or better, and by applying that first criteria, we've trimmed away our potential candidates down to, from 5,700 to 2,053 candidates. The second filter is going to be the timeliness rank, and we're looking for something 3 and above. The timeliness rank is a measure of expected relative performance over the next 6 to 12 months. By applying this criteria, we've cut the list down to about 863 matches. The third filter is going to be the market cap, and we were hoping to find something below larger cap equities. Let's see, so we're going to apply a filter for moderate-sized stocks. These stocks have market capitalizations between $2 billion and $12 billion. And applying this filter, as you see, it entered there and loading. Our opportunity set has been reduced down to about 373 stocks. Now we're going to apply performance criteria by looking at the 18-month target price range midpoint. Scrolling up to the company data section, we're focusing on stocks with 18-month appreciation potential of 25% or better, which is about, well, it's above the median, which is currently 22% in the Value Line universe. And by applying the screen, we've chipped away at the list of prospects, and it comes down to about 140. The fifth criteria, the fifth filter, is looking for financial strength of A or above. This measure emphasizes the balance sheet health of the stock. We think this is important given the current turbulent environment, and employing this filter brings the number down to 23. And we wanted to have a valuation consideration in our screen, and so we elected to have a relative multiple PE of 0.85. Using this filter, which we think will aid or select some good value, brings us to our final, I believe it came to 9 stocks. And you can make a strong argument for any of our remaining candidates, and investors interested in adding new positions should consider them. However, only one can be today's one stock to buy right now, and after consulting with a number of our senior analysts, we prefer and recommend United Therapeutics. Before I click on UTHR, the ticker symbol, please note that screens can be saved and revisited by utilizing the Create Saved Screen button at the top. And as far as the latest full-page report, let's see if we can go over there by clicking the name and go back to the latest full-page report. You can scroll up, and then I believe on the right-hand side you'll see, there we go. As you can see in the statistical array, or the center of the report that includes the financial data, earnings are expected to rise to $17.50 per share from $15 per share, and decelerate to about $19 per share in 2024. The multiple is a bit higher than pre-2020 levels, but it is undemanding in the low double-digit levels. And you can see that at the top of the page, the PE ratio. The company's PAH franchise is solid thanks principally to Remodulin, its principal drug. The stock appears to have upcoming catalysts from possible drug approvals, plus the company's balance sheet also appears sound in this increasing rate environment too. Taking a look at some quantitative metrics, the stock has only average marks across the board, including a safety rating of 3, a financial strength score of A, and a beta of 0.80. The issue has a nice upside medium price for the 18-month target price range of 25%, though its 3 to 5 year returns appear a little bit below average. All told, we think that United Therapeutics is poised for strong results in 2023 and beyond, and the stock can form one of the building blocks of a successful portfolio. It is today's one stock to buy right now. We will now tackle your questions. Please note that I typically can't answer complex questions about specific stocks on the spot. For this, I recommend a review of our latest reports. The first few were submitted prior to this presentation, and now I'll hand it off to Alan and Nathaniel.
Thank you, Charlie. Thank you for listening. The first question that came up had to do with the 18-month target price range versus a 3 to 5 year target price range. And about, I would say, several years ago, 4 or 5 years ago, Value Line, we've had the time-tested, timeliness ranking system for decades now, and we've had the 3 to 5 year target price range for quite some time. But we realized that there were some investors with more intermediate term investment horizon. So that's why we felt there was a need for an 18-month target price range. So investors can look at it short term, on the long term, and also for the intermediate term. So just wanted to point that out. Thank you.
Emma, do you see any other questions there? Alan?
There's another question. Yeah, there's another question about the PE, and for this particular stock, as you can see, historically it has, as Charlie alluded to, it has traded at a discount to the market PE multiple, even though, as you can see in 2022, the multiple is 14.5, which is a bit high relative to historical standards, but it is still trading at a discount to its historical PE multiple. So, that's something that investors should keep in mind, not the absolute PE, but the relative PE. And it still is, even though it is trading at a higher PE, it's still a discount to the relative market. And we believe that's, likely due to the promising, earnings potential.
I had a question from somebody.
I'm sorry, go ahead, Charlie.
Yeah, it was just a basic one that maybe we should go over from Peter, who mentioned about the line that is over the stock bar chart in the array that you see, and how the value line, the so-called value line, is derived. And basically, that is going to be a multiple of the cash flow each year that is an historical average typically. And when you look at the line above the price chart or above the bar graph, you're hoping to find something that has a value line that is below the stock price. As you can see, the stock price is heading up towards the value line and towards its cash flow projections on an upward trajectory. and the cash flow multiple in this case, I believe, is 8. Any other questions?
I'm not seeing any others that I think that we're equipped to address today. So I don't know. Do you guys have anything else that you'd like to add?
Alan?
I think that's all. I'd like to thank everyone for joining us.